Everyone, literally everyone is hunting for that holy grail strategy through which they can mint millions and billions through trading. But you know what? A lot of people don't understand that the most important aspect when it comes to trading isn't about strategy. It's all about psychology. And in today's video, I'm going to tell you about 5 different things which you need to consider if you really want to become a good trader from a psychological point of view. Well, the number one mistake which a lot of people do at this point of time is they do n number of mistakes. In the sense, 97% of the people, once they lose out some amount of capital, what do? They try to infuse more capital. Isn't it contrary to what these people should be actually doing? Ideally, a person after incurring heavy losses should be reducing their capital rather than increasing the capital. You need to understand why. Let's understand from a psychological point of view. When you're losing your capital, it's pretty evident that some things are not working in your favor. Maybe you're using the wrong strategy, maybe you're not following the right risk management principles, or your complete theory or understanding about the particular segment, it could be futures and option, is completely flawed. In this kind of condition, instead of increasing your position size, what you should do is reduce it. So here is a hack. What you should do is, if you are incurring continuous losses, make your capital 1/10 and then restart trading. Coming back to the next psychological point which I've seen is, a lot of people don't give any sort of weightage to their emotional aspect. Everyone is trying to increase the monetary capital. Everyone wants to increase their technical capital, but no one wants to increase their mental capital. Have you ever observed that the days when you're annoyed, the days when you have conflict with your loved ones, the days when you are having an argument with anyone, these are those days where you actually lose significant amount of money. Ever wondered why? Because psychology plays a very important role in the life of a trader. If you're not mentally stable, if you're not able to focus on your trades, there is a high possibility you might end up losing a lot of money. In this case, what should you do? If on some particular day early in the morning you had a conflict with someone, if you're really stressed out because of some prior commitments, if you're having a lot of issues with your spouse at this point of time, it's better not to trade. Remember, the markets aren't going anywhere. They are here today, they'll be there 10 years after, and they will be here to stay after 60 years also. But your capital once gone, it would be very painful for you to recover it again, and it might become really difficult. The third psychological aspect is about trading during the event days. A lot of people often ask me that this particular company is going to post its quarter result. Should we really initiate an option position? Should we really go with a futures positions? Should we really start buying equities out there? You got to understand, when we are actually trying to speculate about certain events, the outcome is actually uncertain. You know, other than insiders, other than operators, and other than the promoters of those companies, no one literally knows how the results are going to be. And no one actually knows how the markets are going to react on the result. When you're actually trying to create a position just before the quarter results are out, it could be in futures, it could be in options, it could be cash, it could be intraday, it could be anything. When you're trying to do so, you're actually speculating with an anticipation that all the things will actually work into your favor. Now, just for a second, think, what if the results don't come out in your favor? You will end up losing money in case you have bought futures. And the same thing would apply in cash segment. So what is the hack? If you want to be psychologically free, don't start preempting various events. Don't think what would be the outcome of an RBI policy. Rather, wait for the RBI policy to be out, look into the price action, and then take an informed decision what to do with your strategy. Don't wait that what would be the quarter result for XYZ automobile company. Rather than wait for it to first come out, let the screen speak for itself, and then finally try to execute the order. Another important aspect which you got to understand is, a lot of people are into psychological dilemma while picking up their style. A lot of people often ask me, should I be trading futures? Should I be trading options? Or should I go for option selling? Need to understand, it all depends on your personality. Everyone, each one of us has an unique personality. If you are someone who really gets intense panic attacks while picking up a stock within a few seconds, you are not made for intraday trading. If your heartbeat goes up within a nick of time, you are not made for intraday trading. If you are someone who has a lot of patience and he doesn't mind to take relatively higher risk, maybe you are made for option selling. Plus, if you are someone who has patience to hold into position and is a little conservative, then you should ideally go for swing trading. You got to understand the style which you are picking for trading has more to do with your psychology than your strategy. Always remember, there are n number of strategies right now available on the internet with which you can make humongous amount of wealth, but it won't work work for everyone. A strategy which works for Abhishek may not work for Rakesh Jhunjhunwala. A strategy which works for Rakesh Jhunjhunwala may not work for Warren Buffett and henceforth. And finally, when we are talking about psychology, you got to understand it's always advisable if you read some good books on trading psychology. In the inception of my career, I'm grateful that I could read some books like Trading in the Zone by Mark Douglas, Disciplined Trader by Mark Douglas. For a trader who seriously is considering to make full-time trading as its profession, one should definitely consider reading these books. Some of you might say, come on Abhishek, these books won't help you out in practical life, and moreover, these books have been written by Western authors. Are they still applicable with Indian markets? You got to understand, human emotions across the globe are more or less same. We all are always striving hard to get out of the zone of greed and fear. So yes, my dear friend, the rules are still applicable and very much true even in Indian context. So read these two books and definitely let me know your opinion. How do you feel about your psychological development at this point of time? I'd love to see your comments in the comment section about what is the biggest psychological problem you are facing at this point of time, and maybe in the near future we'll shoot another video to address that issue. Till then, keep learning and keep growing.